but largely a lot of it is there in the prices, which is why we expect broader markets to consolidate. So we have a Sensex target of 21,200, which is about 10% upside from current levels. What we believe is that 2013 in general would be a good year for equities, and people need to be more stock specific rather than sector specific in 2013.
Okay, that's the
Pankaj,
HDFC
we will be
Bank
cutting into the HDFC management, but since Mr. Sukthankar hasn't begun, quickly can you begin with what would be your top picks? No, sorry, Pankaj, we'll just come back to you in a minute. Let's hear out Mr. Sukthankar.
Our base rate has been reduced by 10 basis points from 9.8% to 9.7%. As you're aware, the base rate calculation is required to be reviewed every quarter. So our ALCO reviewed this for this quarter last week, and factoring in the slight reduction in fixed deposit rates as well as the CRR reduction we had seen earlier in the quarter, on a cumulative basis the calculation has thrown up the base rate reducing to 9.7%, and that's what the base rate will be effective today. We'll be happy to give any clarifications or answer any questions that you might have.
So how much has the cost of funds basically moved if we compare with the quarter and quarter, because quarter is ending today?
Sure.
So quarter and quarter, how much reduction have you seen in the cost of funds?
See, the base rate calculation is not based on an overall cost of funds calculation. It covers a couple of fixed deposit tenors which are specifically included in the calculation. It also includes the grossing up of the cost of our deposits by the CRR and SLR, and there's a small influence of the policy rates as well. So our overall reduction in interest rates and our overall reduction in cost of funds would be something which should happen gradually over a period of time, because it's not only for those tenors but across several tenors.
ये माने कि आपने कोई एंटिसिपेशन नहीं रखा है कि आगे रेट कट होंगे, उसके लिए आप पहले से तैयारी नहीं कर रहे हो, जब भी रेट कट होंगे आप फिर उसको पास ऑन करेंगे?
हाँ, because जो कैलकुलेशन होता है उसका it's not something which gives you a chance to do something proactively, because there are specific rates which we include in the calculation, and the whole idea of transmission is कि जैसे जैसे rates change हो deposit costs के deposit rates, या तो फिर CRR या SLR में कुछ बदलाव आता है, तो the impact of that gets translated into the rates on the base side.
So we can understand that we are moving now towards a softer interest rate scenario, because RBI also in its October policy had given a guidance that looking forward, if we see the inflation numbers sliding down, then we could move towards a more softer interest rate scenario. Are we seeing that situation coming in?
Yeah, I think the general anticipation is that there will be a reduction in policy rates in the Jan to March quarter, whether it happens in 2 tranches of 25 or otherwise. I think most participants in the market, most banks believe that there will be a 50 basis points reduction in policy rates in that quarter. But that by itself is not enough, because ultimately the major impact on base rates for almost every bank will be the deposit costs which are included in that calculation. So in conjunction with what happens to policy rates, depending on what's the liquidity situation, I guess banks would react in terms of reducing their deposit rates, and it's only when the deposit rates are reduced, then that plus the policy rate changes will translate into further rate reductions on the lending side. So I think it's a combination of the liquidity scenario. As you're aware, right now the total borrowings under LAF are almost 1,40,000. I would be surprised if banks feel comfortable dropping deposit rates if the borrowings are as high as that. So if by that time you do have a reduction in the LAF borrowings, perhaps somewhere closer to 60-70,000 crores, then perhaps banks may be comfortable dropping deposit rates, taking a cue from the policy rate changes, and then that in turn should help essentially sort of the trend of declining interest rates.
So after the base rate cut, do we also see some following it by the deposit rate even in the selected tenures?
Not right now. I think you have seen the last few months some reduction in deposit rates, especially for, if you look at the 1-year rates, for instance, they were well above 9%. Now they're about 8.75. But at this point of time, I don't see a further reduction in deposit rates. As I said, till the liquidity scenario, in terms of the overall banking system, liquidity scenario is a little more comfortable. As you know, again, if you look at the last deposit growth rate numbers which have come out, they have dropped pretty sharply. So, in such a scenario, I'm not sure banks will be comfortable dropping deposit rates any further.
What kind of credit growth have you seen in the past quarter? So, and I mean, is it more a factor of you requiring to bring down rates to push credit growth that we're seeing this kind of factor?
Not really. As you can imagine, I'm not going to be able to talk to you about any numbers. It's just a couple of weeks down the line that we can declare our results and we can talk about that. But as I said, in the whole transmission mechanism, which is now a part of the base rate calculation, really leaves very little flexibility, or just as you can't be proactive, you can't be reactive. You sort of do that in that very quarter. So as far as our loan growth is concerned, I mean, has the reduction in rate been necessitated by that? I don't quite think so. It's just a reflection of the slightly lower overall cost of funds, including, as I said, the cost of maintaining reserves, and that essentially being passed on as per the calculation that the bank has in place.
So most banks right now are still waiting for the RBI policy, and then probably they take a call on cutting the rates. But so what's the rationale behind cutting it right now, before the policy also, and post the policy, is it, can we say that HDFC Bank will not be taking a call on any, rates in case RBI cuts the repo rate?
No, I think I'll be sort of in some ways reiterating it. Every quarter we do review the base rate calculation. So in fact, we had first dropped our base rate from 10 to 9.8 in the first quarter of the year. That was based on whatever reductions we had seen at that point of time in both reserves and the deposit rates. In the second quarter, which was the September quarter, we had reviewed the calculation and nothing had changed. And now, based on whatever has happened so far, in terms of deposit rates reductions, as well as the marginal 25 basis points reduction that we saw in October end, I think, in CRR, this calculation is done. So it's not trying to say that because if there is any further change in policy rates or reserve requirements or deposit rates, whenever we review this in the next quarter, that will come through in the calculation. So, it does not mean that, we would not do it or we would do this in anticipation. Again, whatever the numbers come out in the quarter ended March, in the next quarter, we would review that at that point of time.
So what would be the impact on NIMs?
At this point of time, I'm not going to be commenting on the P&L impact. I'll be happy to take those questions, when we sort of declare our quarterly results. As you can imagine, in any case, this...
Well, actually, that really was the crucial question. What will be the impact on margins? And Sukthankar not willing to reveal that. But I think the important takeaway is also that there's no cut in deposit rates that he expects. So next time around, if the RBI cuts rates and the banks drop rates, it will happen without a cut in deposit rate. Or so it seems. Another unsettling number coming from the fiscal deficit. It was not unexpected. At the end of 8 months, April to November, we should be 66% of the fiscal deficit. We have achieved 80% of the fiscal deficit. Some adjustments are always possible in the last quarter when expenditures fall and advance taxes pick up. But will we be able to bridge this gap will be the big question.
Lata, if you just do the maths, simple maths, it's an average of 45,000 crores what we've used from April to November, and with the pending amount it comes up to around 25,000 crores.
No, obviously that is it's wrong to extrapolate, because it's always true that in the last quarter there is a bigger urgency in terms of giving tax targets, and as well expenditure cuts will start showing in. Perhaps even some bit of divestment money will start coming in. So fiscal deficit will look very different. And we can't extrapolate 80% at all, but nevertheless, that's a number to watch out for. Okay, Pankaj, sorry to have kept you waiting, but tell us, let's begin with the banking sector, since that's what we have discussed, or that's what we heard about. Any mid-cap banks that attract your attention that you are picking up?
For 2013, what we expect is that the PSU banks are likely to do better because we expect that the asset quality concerns would peak out and valuations are still reasonable. But a lot of it is there in the prices. So in terms of stock picks, I think we'll go with SBI. Though on an absolute basis, we don't expect it to really outperform the market. So which is why we have a target price of about 2,700 on this stock. So in the mid-cap side, we like Dena Bank, which is again one of the quality banks which has delivered good ROEs of more than 20%, and it's still trading below one-time book.
Okay. Pankaj, any broader market picks besides banks that you're looking at quite favorably in 2013?
In terms of stocks for 2013, what we have picked up is TCS, Tata Motors, Tech Mahindra, Z Entertainment. Within large caps and within mid caps, we have a couple of stocks like Balkrishna Industries, we like Info Edge, we like Page Industries with the kind of growth what they have been delivering. In addition to that, Kansai Nerolac and Mahindra Lifespace developers.
All right, Pankaj, we leave it at that. Thank you very much for joining in. So that's the view coming in with regards to a couple of picks that you can expect within 2013. It's okay for the markets at this point in time, a bit subdued, just about hovering at 5,900. Nothing really to worry about at this point. Even the rupee is pretty stable. We'll get talking on the technicals on the other side. So Darshan Sakani will join in.